Happy Friday, everyone. Welcome to today's take with the market mindset. Happy to have you here. We're doing this as a bit of an introduction as to what we're offering to our future subscribers, not just people that are free subscribers to the channel, but people that are paid behind the wall subscribers. The model that we use for narrowing down stocks that we want to focus on, it's kind of what we looked at was, I'll give this an example because we're going to show it. And we'll show two different companies, both Goliath Resources and Power Metallic. We thought we'll show two ones we've talked about before. We like them both. We think they're both great. So no shock, no surprise, but they have different scores in our model. We wanted to share how we've come about that process, how it works. And we're still beta testing it to some degree, although we've done it back testing on all sorts of companies, both wins and ones that have not done so well, to see is it hitting the mark, and it is. And this we've got all sorts of disclaimers and stuff we're working on, putting it all together, but we wanted to just kind of look to see what the goal of this is. And we'll be offering the final version in September 1st, but it's free right now. So if you want to join up on Substack, we're happy to share that as we flesh it out to make sure that we're not hitting any other snags or issues in regards to the data. And a lot of it is kind of simple. Like, I mean, you wouldn't even, I mean, if you wanted to do it yourself, you could. And we're willing to share most of that with you today, and that was just a little bit of a difference today, rather than just talk about news flow and whatnot, because we wanted to kind of differentiate why we're able to have some of the success that we have, and also just for people to go, this isn't necessarily a model that's going to show you a price target or a number of what the stock should be, nor will it tell you that a company will get bought out or do an M&A, or that it's going to hit the mother lode. Nothing can do that. There's nothing predictive of that nature. But what it does do is it helps to, once again, narrow down and nail down companies that have the highest potential rate, or from their latest news results or new assays posted. Is it still improving upon its thesis? Is it seeing a lot of green lights? Because once again, we're talking about a very challenging business of drilling holes, looking for deposits. It's not easy, but because we've got like a resource like a mining hub, which we love, and you can sign up for free too, and they'll send you out like daily assay results. We wanted something then to take it the next step to go, okay, if we see XYZ company and they hit great results, if I just take that result and throw it into our model, and maybe we don't know much about the company, what number will it give us? And it'll give us a number between 0 and 100. And if it's poor, or it's great, or it's average, or whatnot, at least we'll see where it's scored at each place, and look further into it and ask the model, okay, why is it this number? So let's just pull up Goliath and Power Metallic right now, so you can see. Here's the score out of 172 for Goliath. And we'll go to the next one too, just so you can see it for Power Metallic, 64. So a big difference there. And we really like both these as well. So we wanted a bit of a spread of ones that we like, that you say, oh, well, that seems like it's, a bit of a spread here between two great companies. And there would be lots of argument as to someone saying, no, I think it should be the other way around. It should be this, should be that. And that's great, because we want people to join in to say that, no, listen, we think that these numbers should be different. And we want to encourage that conversation. And we're not pretending like we know exactly each one. We're just finding that this model is actually definitely, it's a tool. It's definitely helping, and it's aiding us along this information gathering and applying the factors that we think are critical in looking at especially juniors, but it also applies to some degree to producers, although we have an extra added layer that we add on to producers, because obviously they actually have production. So let's take a look just at and go through just the terms here and the factors that we use. So we've got 10x. So there's 10 factors, hoping to, I guess, really try to find that next 10 bagger. I guess that you give a 10 by 10 if you want to be kind of cliche and think of some cute little marketing term. But So we look at the macro setting, and what we're doing is we're looking at the commodity price trend. We're looking not only at the overall financial climate, we're looking at macro policies, anything that could affect the deposit economics. Basically, are we looking at, say, if it's a 9 to 10, is the commodity in a structural bull phase? Are capital markets wide open? And of course, there's nuance to each one of these because, yes, we're in a bull phase for sure on a lot of metals. Are we on capital markets wide open? No, not at all. I mean, it's mining, so it's very challenging. So in reference to mining in general in the last decade, is it opening up? Yeah, a little bit better, certainly better. A score of 78, price stable or rising, equity raising possible but selective. So, is it all ships are rising? Are we able to just fund every project because everyone's excited about the mining sector? Okay, well, that used to be the case in these big cycles in the 90s and 2000s, where you get this massive flow and all companies raised up and there was huge wins, whether you're a great company or not. And of course, the real gems stood out and did exceptionally well. We're certainly nowadays we're looking at more the real solid projects are gaining attention and they're getting funded. And often with raises like these too, it doesn't matter who you are. If you even get into the financing, you're probably getting pared back. And that's frustrating for people, whether you were not invited and you can't invest in it, you didn't even know they were doing a round of financing, or if you do manage to get in and someone says, sorry, you wanted to do 20, 50, 100,000, you can only do 8,000. That annoys people because people can use it as a selling technique, but often these great companies that are doing very well, and they're not they're de-risking to us, I would say, to some extent, but they're making that the risk asymmetrical return is getting better because they are finding deposits, they're finding widths, the geology and the thesis is coming together. And of course, then when you're looking at 5 or 6, you're kind of saying the commodity is kind of going sideways. It's not hitting anything attractive. Certainly raising money for it is much more challenging. And below that, of course, tailwinds are heading off down south. So we can see whether you're looking at Goliath or Power Metallic, gold's near all-time highs. Now, Power Metallic is a polymetallic system, but nickel is supported by EV demand. They're hitting huge copper numbers, and copper is doing extensively well right now. But also, both of those have very long-term, robust outlooks because they're both critical not only in EVs and in batteries, but in all of the electrification. So both very positive. And that number, like we've given 7 to both of them, that can fluctuate at any given time. And these are far off from production. So they're just kind of highlighting as of a snapshot of today where we see it. If we look at jurisdiction, pretty straightforward. It's looking at the mining law and the stability, not only of just the law, but of permitting timelines, say tax or royalty burdens, overall stakeholder community acceptance or agitation. This is pretty self-explanatory. This is certainly very challenging anywhere in the West. The hardest issue is getting mines done because you're going to get opposition to try to stop the project. That is, if you're new to the channel or new to mining, that's probably one of the biggest things that keeps people away. Is they think, okay, this is a tough investment. Yeah, when it hits, it's huge, but to think that if you find something, someone could stop it very easily is very disappointing. And that is a climate of politics, essentially. That's pretty much what it is, because it doesn't stop China. It doesn't stop India. It doesn't stop a lot of developing countries that they're going to put projects forward. And that isn't because that they're breaking laws. They're not. They're keeping environmental standards to a UN or to a world standard. They're just actually open to doing it. Whereas, Canada is distinctly challenging because of a political ideology that people have. And that's challenging. And that has to change if you want to attract a ton of money in. So If you get a 9 or 10, obviously you're in a low tax, predictable regime. Permitting timelines are within a year. Pretty tough to score 9 and 10 anywhere. Certain countries have announced that they're changing their structure, and that's great to see. But we also have to wait to see, well, how's that going to actually play out? Everything's going to be constantly challenged in court as well. This is, once again, a problem with the West. And so I'll say that's the US, Canada, Europe, and whatnot. Once again, because we've incentivized and monetized advocacy and PR and environmentalism, that people can have careers in which they just essentially, put lawsuits onto projects and make a living off that. And that's a very cynical way of looking at it, because we want people to ensure that things are done properly and safely. But if you already have a government that has a very stringent, never mind a world standard that's very stringent, do you constantly need like 30 more layers that are overseeing? No, you don't. You really don't. So obviously lower scores beyond that, 7 or 8, you're looking at mining friendly, but slower paperwork or higher royalties, a bit more onerous. 5 or 6, supportive law, but public opposition or long time frames, long permitting. Goliath, we're looking at a 6, and Power Metallic a 7. So we that, once again, people don't like to talk about jurisdiction because it is politics, and it's never fun to talk about politics, especially the last few years. But you do have to address it when you're dealing with major infrastructure, energy, and critical metals that the entire world needs. You have to deal almost mainly with, yes, finding something, but then are you going to be able to get it out of the ground? And you would imagine years ago, whenever countries were truly trying to strive forward and do the best for the country, they would just make it happen. Like China's doing that. They're making it happen. They're just going to do it. And they're having a lot of success with that. Here, not so much. So we need to have a rethinking, and it's happening. I mean, we see Fast 41 in the States. They're applying new rules and new laws. Even the current liberal, contingency in federal are open to discussions. They've given out some ideas of a plan. I like the overall talking points, but it hasn't been fleshed out yet. But once again, if they can streamline in a positive way to get permitting going, that would be great. The problem with the opaque or vagueness of the current federal plan is that it may not actually make it easier. It may make it twice as hard to permit anything that the federal government doesn't want to do. So this is a problem, is that if it was, you can permit anything if it passes, that would be great. But if it's that, no, they have to say, we like that project, we'll then permit you fast. That becomes a very, very big challenge, because once again, no governments are very, very good at picking projects that are winners. That's just a sad, unfortunate reality if you want to do a deep dive into the success of governments picking projects. Now, picking any projects, whether it's private markets too, is got low success rate because it's very, very tough, but it's exceptionally bad whenever it's government run. Number 3, geology, pretty self-explanatory. What's the grades? What's the width? What's the continuity? What kind of deposit and style is it? And is it have any similarity to proven analogs? Score, pretty self-explanatory. 9 or 10, it's robust. Thick intercepts, open in multiple directions. Tier 1, analog. That's kind of the setting. 7 or 8, good grades. Minor gaps are open. Some questions, but looking good. Still having to do a lot more drilling and get a lot more data. 5 or 6, encouraging, but continuity or metallurgy is unproven. You can see, of course, as you go down that scale, I won't go into in depth each one, but you can see it gets less and less and less. But you're getting a sense of a score to go, ooh, okay, I need to look more in depth into this. And once again, this data, a lot of it, not only is it from your latest news release, it's then going to just be in the deck of a company or if you really have to do some hard work, you can go into CDAR and pull information off of there. So it's a little bit of work, but it's not like tremendously onerous. And believe me, this little bit of work will save you a ton of time kind of getting around the idea of, is this a story or is this only closology? Or, kind of like how people would joke whenever they would see a deck about XYZ critical mineral company and 75% of it was Tesla and showing batteries and very little about the actual mining, is that, people go, what kind of deck is this for? And you realize they're just trying to do a big promo. They're just trying to catch any attention, to draw attention to, look, we're associated with this. So this is a scorecard that we can pump in very quickly. If I see a company with assay results and I don't know, I'm like, well, I've never heard of them. This is great results. Should I pay more attention? And then if I'm able to narrow down and see these, good scores in different areas, it's not hard for me to then to go, siphon in exactly what I need to be looking for. And of course, one of the great things with, doing the show and talking to CEOs all day long is number 4, management and team. I got access to them quite easily. And it adds to also, if we want to reach out to a company that we don't know as well and say, hey, you scored quite high. We're not familiar with you. Let's find out some more about you. Because not everyone, you need to have a great management team, but sometimes companies hit and they hit well. And they start adding to the team. And of course, you want to know that before it happens. So what we measure, we record, the track record of discoveries. Do they have mine builds, the capital markets skill? And of course, it is that idea that you have to have the project, the people, and the money. And you need to see all of it, not necessarily in one person, but certainly within the team. Is there an expertise? Because it's capital intensive. Do you have someone that can continuously raise money? That's a key skill. And not just because they're good at marketing, but they are good at marketing. They've got an active ear because they've got a track record that's overall very strong. And once again, you can't always be right. You can't be 90% right. If you're 7 out of 10 with above average or 0 plus 3 big huge winners, you're doing exceptionally well, and the people you're raising money for are very happy. So what you want to see is the score that we give there. 7, 8, they are seasoned explorers with at least one prior exit, and also management has skin in the game. I won't go through all the measures, but basically, when you're looking at the management, what are the key criteria along with soft skills? Have they had a track record? Have they worked at the big ones? Say, have they worked at BHP for 10 years and worked on a specific nickel project that has a type of geology? And now that's what they're looking at in a similar jurisdiction. Boom. That's very interesting. That makes this thesis a lot stronger. Once again, it may not give you a 10, but it certainly adds the weighting, in favor of one way or another. Number 5, catalysts. So we're looking at any upcoming inflection points. So are they waiting on assays? Is there a resource or hinting at a resource soon? Is there a PEA? Are they waiting on permits? So we're looking at the realistic intention of the drill program. How big is it? What's the time frame for it? And then, of course, understanding that what's the funding status. So someone's sitting with a ton of cash. You look at both Power Metallic and Goliath, very good scores. If they have lots of strong funding over multiple times with the type of people that have been involved in the funding and, the number of billionaires and big names, that matters. That, once again, it ties into the team and management, because really the people that are really funding these things really become kind of part of the team of a company. You can see the holdings right on a deck. And that's important because, once again, it isn't that you could just go, okay, give me every company that Sprott's put money into. Well, you have to see, how much have they continuously come back to? Because they probably have money into 80% of all deal flow out there, whether it's between Eric Sprott personally or just Sprott as a company. But it's did they give 50,000 or did they give 40 million or 10 million, or have they come in every round, or did they come in one round 5 years ago? So all of these things we try to narrow down, and we try to get, okay, who's in it, what kind of events happened. Was there multiple? But this is taking a snapshot from today and looking back in the past few years, and what does that score? We'll move into liquidity because that's a major one as well. It's often, the companies that have more concise, cleaner stories, I guess you'd say, or that have attracted a lot of interest because they're building an actual narrative and story. Well, they're going to have a lot more trading depth and liquidity, quite obviously. We're looking at average daily volume, the free float, and also any ability to absorb an institutional order. That's a brave call. That's kind of like your pie in the sky. If we really got a huge flow of money into the mining sector, you'd be talking like institutional level. It's still juniors. It's hard to have that kind of volume in the space. But we've got our scale from 9 to 0, essentially kind of saying what's the volume, what's the spread risk in this. If you weren't doing a financing, but like you wanted to go in and say, well, they're fully funded, but I want to buy 200,000 of this. Is that going to move the market like insanely large? Which you go, it might. That would also trigger someone going, oh, I'll take some wins off the table, because these very high volume traded ones, they're key ones for people to actually trade. There is some volatility, and people who do like to trade penny stocks, when they see a good volume stock, well, there's a good chance to trade in that. So very hard to really add into your position too without massively affecting the market. So also 7, balance sheet strength. So we look at cash on hand and burn rate, of course. Also, is there debt or any kind of convertible debt? And also, once again, we're tying into that access to capital thing. So some actual data where we can see here's the number, here's what we've got today, but also is that independent or optional variable one of, are they going to have ability to raise more? Once again, a Power Metallic and Goliath have consistently shown, we can raise money. And that's great. It's necessary. You have to have the results, the asset results, to continue building the strength to raise money. I mean, it all is intertwined together. But there are stories that hit decent and just don't gain the traction. They don't get the following. And there's many reasons for that. So, part of it is you constantly have to be out there, and someone who is in tune with that market, raising money, reaching out to people like me, to other people who have people that are hungry for stories and just need to be reminded, what is this story? Why should I care? What's the likelihood of it? These metrics of looking at how much money and how much is going in the ground is very critical. 8, capital structure. So shares outstanding, overhanging warrants. Looking at, say, initial founders or cheap seeded paper, and also management insider strategic ownership. Once again, there's a lot there to be said, but of course, if it's a blown out capital structure, you look at it, you go, oof, is this going to have to be rolled back and cleaned up before anything real can happen? Or what's it going to take to actually move this stock, even if there's good news? Because if someone was in around and they just want good news to exit and move on to something new and exciting, there could be 30 million shares out. There could be 100 million shares out. Who knows, depending on how big the structure is of this company. You do want to see how many shares are out there, what's that overhang, and also if there are warrants that are in the money or options in the money, that's another funding round that can come in without having to go and do an explicit raise. And that can be a very big, good sign for a company to go, hey, these are in the money. We're calling them up. We got the next round funded for drilling. So there's lots of things like that once again, help us to narrow down on questions we can ask the company, and 2, just spend a little bit of effort to look and go, oh, okay, why is this structure like this? Oh, dear Lord. Because at the end of the day, you have to be able to make money on this thing. So this is a very, very critical step here as well. Market psychology, the sentiment overall. The difference between a lot of sentiment or newsletter coverage or social media buzz versus momentum, recent price momentum versus fundamentals. This one is a lot more challenging because it narrows down into how much of money is going into marketing compared to what are the actual results. This is a very critical number 9 here in market psychology, because sometimes companies get a huge tailwind out of what if, and it just takes off, and you can get excited off that momentum and do well and say, oh my God, this stock is climbing. But that means you can also get caught on the tail end of that, is that you're buying the wishful thinking, and then there's going to be a sell-off on the news, even if it's good news. And that can be challenging. And you need to look to see, is there strong interest in the geology, in the actual company and the thesis, and if they're hitting the milestones, or is this just more buzz and that it's liquidity? It's a lot of, kind of like we mentioned before, the deck with a lot of Tesla in it or a lot of robots in it, and you're talking about nickel. Is it too much buzz, or is there a lot of real here? And that's what we're trying to harness in here, is that why is this stock seeing all this volume if we don't think there's a reason to? It's a highlight for us to take a peek at. And then 10, the community or ESG. So this one is a mixture of your community relations, stakeholder, environmental stewardship, transparency, and whatnot. This one, of course, is tied into a lot of other factors as well, but does the company have formal agreements with neighboring tribes, with neighboring environmental groups, or anyone who's going to be an issue or could be an issue moving forward? How strong are those agreements? Are they just kind of, hey, we're in talks, or is it no, where we've got people say we've got great relationships with XYZ tribe? Well, okay, if I'm getting very serious about a project, well, let's talk exactly what you mean by that, because it's a very vague term, like saying, oh, we're fascinated by the geology. It's like, yes, but is it minerally rich? Well, I don't know, but it's very interesting. Is that, well, you've got good relations. What does that mean? Do you have a formal contract, legal document that you can enforce? And even still with that, you might have to go to court. That's a big 1 to 10 of what does that actually mean. And it means a lot, because at the start, maybe not as much, because you're going to get a lot of momentum and a lot of tailwind from a discovery. But if you're moving past that idea of we've hit some great assays, the story's building, can this actually become a mine? We're doing the metallurgy. Well, then, yes, this then moves up to be a very critical one, is does this have any chance of becoming a mine? Because if it is that a cactus flower can stop this thing from becoming a mine, that we need to know that. It means, yes, there could be money to be made here, but this is not, this has still got a big question mark. So if you put it all together, we're looking at each factor highlighting a specific risk, and then we're getting a good score, which will give us different bands. And certainly a lot of nuance in between those bands. And we're looking obviously at a positive, a neutral, or hold, or like, we're kind of looking, it's not on our radar, to weaker, critical in a negative way. We're just not interested. We just don't see this one, going forward. So it compresses this multi-factor checklist into basically a score for us to look at and go, that's an interesting score. Why is that? And then when we do this moving forward with our subscribers, we'll get into a bit more details as to why, say, if we look at Power Metallic or Goliath, why we feel that the next trigger is, either the cash burn is accelerating at a rate we're not comfortable with. We can get more into the nitty gritty of this scorecard and model. And we're once again, we're still in that beta model, because we want to be sure that because once again, it's not predicting a stock price or that it's going to become a mine. There's nothing that can do that. But what we are doing is trying to utilize as much algorithm AI data that we can get, crunch it down, and to give us a snapshot as to where we should focus out of these thousands of juniors, to look at when we see a new news release from, say, Mining Hub that shows XYZ, great width, great strike, and I've never heard of them, and they're in Finland. I want to be able to go quickly throw it into this model and see, do I need to be looking at this any further? Or, this is it's a one-hit assay result. It's not really fitting the thesis. Keep it on your radar. Worth looking at, but there's a lot of also big question marks here. And once again, because this is a challenging enough market, we spent a long time working on a course and ebooks that's, kind of spells it out and writes it out in depth. But we also wanted to then give that to people where it's just, boom, a scorecard. It's a good number. It looks good. And over time, we'll get to see how successful they are. Whether or not they get made into mines or not is that's a long-term decision that really comes down to the government. But we are finding that a lot of companies that have done very well, they're scoring very high. And there is that it's not predictive, but it is analyzing the right factors that we're focused on to give intentional results that we can kind of focus on and interpret in a positive way. And of course, the ones that aren't that exciting, they're not scoring very well. So we're very heartened by the fact that this is fleshing out. And before we're certainly going to charge anyone for it, we're welcoming everyone to jump on in, to take a peek, and also just send me off. Go, hey, Andrew, look at this XYZ resources. What does it score? Happy to do it, because once again, this makes my job way easier, like significantly easier. It would take me quite a while to just go, hey, Andrew, what do you think of XYZ? Which I get quite often, and I don't know this uranium company. This then I can harness in on the parts. Oh, it got a 4 over here. I better look into why is that? Or holy smokes, it got a 9. Why am I not paying attention to that? Because then I can, if I'm really excited, I can call up that company, have them on the show, ask them the questions, and provide the content that people want to see, and also kind of find some of these companies before they start going and go, wow, you guys, I don't know who you are, but you scored very high in our model, and I'd love to hear why is this? What do you guys got going on? That's what we're here for. Like at the end of the day, we want people to make money in this sector. That's the whole point of it. But and we try to use the resources that are out there for everyone as well, whether it's RBC, Sprott, anyone else who does analysis as well. But we wanted to hone out our own version, our own model, and offer it to people. And that's what we're doing. So this was our first Friday, just to share what that is, what it looks like. Reach out to me anytime. Happy to chat more about it. We're going to do this every Friday. Once again, it'll be by invite only. We'll do this live again next Friday, just so people kind of get to see. It'll be repetitive, so you might get bored if you watch it next Friday again. We'll choose 2 other new companies, maybe 2 random ones that have results out. I will pick ones that don't score well, because I don't want to pick on people. Of course, whenever you are in the group, we're going to pick ones that maybe one that did very well, that has a high number, and one that has a very low number. And not to pick anyone, but just simply to kind of illustrate what are some of the problems here? What do they need to improve? Is there any hope here? Or we're just simply not interested. So thanks, everyone. Really, really appreciate it. We want to share this with you. And of course, in this kind of beta stage where no one has to pay for anything, send me your thoughts. I mean, if you're a geo and you say, oh my God, this is wrong, Andrew, we think you should add this or that, happy to do it. It's not very difficult to add things out or remove things, but we think we've nailed it down pretty well. And certainly, if nothing else, when it comes to more specific geology questions, it helps us to narrow down to ask them the right questions. So once again, happy Friday, everyone. Have a great weekend. Glad to have you on. And we look forward to engaging with you some more here. And once again, reach out anytime. Make sure you go to our Substack. It's on there. Plus, for subscribers, there's all sorts of articles and in-depth research we've done before on certainly a lot of gold companies that have done quite well, but also the ones that we or other than power, nickel, and metallic that we talk about all the time, that we're encouraged about moving on for the rest of the year. All right, everyone, take care. All the best.